Bitcoin is smashing records and big money is pouring in. Is this your last chance for life-changing gains before Wall Street takes over for good? Top analysts believe a massive altcoin season is about to start, but it all hinges on one specific coin's next move. Are you ready for what's coming? In the latest video from Lark Davis, he breaks down a recent Helios H1 report that paints a wild picture of Solana's growth. It seems Solana is quietly becoming a powerhouse, handling a staggering 162 million daily transactions for less than a penny each. For perspective, Ethereum's all-time high is just under 2 million transactions. After some past stability issues, Solana has now gone over 15 months without any downtime. This performance is attracting a flood of new talent, with the report showing Solana overtook Ethereum for new developers in 2024, adding over 7,600 people to its ecosystem. Lark's enthusiasm is pretty infectious, and the data from the Helios report he presents is compelling. The numbers on developer growth and DEX volume are particularly strong indicators that Solana has built some serious momentum. It's moving beyond the fast change from meme coins narrative. The adoption by real-world applications like Helium and HiveMapper is what really stands out. It's a concrete sign that the tech is useful for more than just finance. However, the Ethereum killer debate feels a bit dated. Ethereum's strategy with its Layer 2 ecosystem is a different approach to solving the same scalability problem, and it has a massive head start in terms of total value locked and a reputation for security. It feels less like a battle to the death and more like two different philosophies of blockchain design finding their own markets. Solana is built for raw, integrated speed, while Ethereum is leaning into a modular, security-first future. The next year will be telling, especially as we see how the Firedancer upgrade performs on the mainnet and if institutional money continues to flow in. In the latest video from Crypto Casey, she announces that Bitcoin has just soared to a new all-time high of $118,000 and is pushing toward $120,000. This move, along with Ethereum crossing the $3,000 mark, is presented as a strong signal that altcoin season is officially starting. Casey argues that this isn't just another bull run. It might be the last chance for people to make a life-changing money before big institutions and entire countries fully enter the space and change the dynamics for good. She predicts Bitcoin's first major move up will be to the $145,000 to $160,000 range, and that it could even double to $200,000 sometime in 2025. The video suggests that the biggest challenge for investors will be managing their own emotions. To solve this, she points to tools like the Moneyline Indicator and the Go Baby Trade AI bot, which are designed to help trade based on trends rather than feelings. Casey frames the altcoin market as a casino where the main goal is to trade for profit, and these tools offer a way to compete in what she calls a rigged and manipulated market. The video does a great job of capturing the intense optimism circulating in the crypto community right now. The idea that this could be the last massive bull cycle is a powerful one, and it's a narrative that's gaining traction. As big players like BlackRock and Fidelity settle in with their Bitcoin ETFs, the market is undeniably changing. It's becoming more mainstream, which could smooth out the extreme volatility that allowed for those legendary gains in the past. Casey's focus on automated trading tools also speaks to a growing trend. Many investors are tired of the emotional roller coaster and are looking for ways to systemize their approach. While these tools can offer an edge, it's worth remembering that the crypto market can defy any indicator, human or AI, especially when unexpected global events occur. The video's predictions are bold, but they definitely reflect the high hopes many have for the coming year. In the latest video from DataDash, Paul Sampson explains that Bitcoin has just smashed through its previous records, closing its highest weekly candle ever above $112,000 and hitting a new peak of $121,500. This rally is happening alongside the S&P 500 and NASDAQ, which are also at all-time highs. A big reason for this push seems to be the huge amounts of money flowing into Bitcoin and Ethereum ETFs, with 2 recent days each seeing over $1 billion in new investments. This shows that big institutional players are still very interested, even at these prices. The scenario Paul lays out, set in a fictional July 2025, feels like a direct and logical extension of the market narratives currently circulating. The idea that sustained, billion ETF inflows could drive Bitcoin to well over $100,000, is the core bull case many analysts are banking on right now following the real-world ETF approvals. His analysis of the altcoin market is also very familiar. The concept of an altcoin season kicking off after Bitcoin establishes a strong new high is a classic crypto market cycle theory. By focusing on the total altcoin market cap chart, he's looking at the big picture rather than just one or two coins, which adds weight to his argument for a broad market rally. It makes his future predictions feel less like wild guesses and more like a potential roadmap if current trends continue. In the latest video from Crypto Wendy, the host discusses Ethereum's return to the $3,000 mark and the growing optimism surrounding its future. The video points out that traditional finance firm Berenstein is predicting a long crypto bull run, with Bitcoin potentially reaching $200,000 by late 2025. This sentiment is fueling hopes for a $10,000 Ethereum. A significant amount of short positions on Ethereum are being liquidated as the price climbs, similar to what happened with Bitcoin. The video does a good job of collecting the different bullish signals for Ethereum that are circulating right now. The comments from figures like Cathie Wood and the CEO of Bitwise aren't just random chatter, they reflect a real shift in how serious financial players view Ethereum. It's not just a speculative digital asset anymore, but a foundational technology platform. The recent Dinkin upgrade, which dramatically lowered transaction fees on Layer 2 networks, is a concrete step toward the scalability Wood mentioned. This makes the network more practical for everyday use and more attractive for development. While the fate of a spot Ethereum ETF in the US is still up in the air, the fact that major firms are pushing for it shows that institutional demand is genuine and growing. In the latest video from The Modern Investor, the host expresses his astonishment at the relentless pace of corporate Bitcoin buying. He discusses a Japanese energy and tech firm, Remix Point, which just raised $215 million with the sole purpose of buying 3,000 Bitcoin. He finds the sheer scale of these daily announcements from various companies incredible, wondering how much Bitcoin can possibly be left for grabs. The host argues that owning even a fraction of a Bitcoin makes you wealthier than billions of people, and that the public doesn't grasp the magnitude of a company owning thousands of coins. The host's feeling of disbelief about the market is pretty relatable right now. The Remix Point news isn't an isolated event, it's part of a much bigger story of corporate adoption, especially in Asia. Japanese companies have been quietly warming up to crypto, and this move signals a shift from seeing it as a tech experiment to a legitimate treasury asset. It feels like the dominoes are starting to fall faster than anyone expected. In the latest video from the Alex Becker channel, he lays out his case for an imminent and massive altcoin season. He argues that the whole thing hinges on Ethereum's price movement. As ETH was crossing $3,000, he predicts that once it hits around $3,500, the altcoin market will start to move, and when it reaches its old all-time high of about $4,500 and pushes toward $5,000 or $6,000, things will go wild. He believes this is because big money from Wall Street and institutional players who have been quietly accumulating Ethereum will create a massive wave of speculation. Becker's high-energy, unapologetic gambling approach is definitely entertaining, but his core thesis lines up with a long-standing pattern in crypto markets. The idea that Ethereum's performance acts as a tide that lifts all other altcoin boats is a classic theory. What's interesting now is how he ties this to the current narratives of AI and RWA, real-world assets. These aren't just random buzzwords. They represent two of the most talked-about sectors in tech and finance. With giants like BlackRock publicly exploring asset tokenization, RWA, there's a tangible thread of real-world interest that wasn't as strong in previous cycles. While his price predictions are extremely bold and feel more like casino odds than financial analysis, the underlying logic that money flows from Bitcoin to Ethereum to large alts and finally to speculative small caps is a cycle many traders are watching for. The whole thing feels like a setup for a classic crypto mania. But whether it plays out with the intensity he predicts is anyone's guess. In the latest video from the Crypto Jeb channel, Jeb breaks down Bitcoin's massive recent rally to $123,000. He says his previous prediction of $118,000 to $125,000 came much sooner than expected, showing just how strong the market is. Now he's looking ahead, forecasting that Bitcoin is likely headed for a new target between $135,000 and $150,000 by the end of September. He bases this on an inverse head and shoulders pattern, with $135,000 being a conservative target and $150,000 being the more standard one. It's interesting to see Jeb's technical analysis align so closely with the broader market sentiment. His focus on ETF inflows as a primary driver really hits the nail on the head. This isn't just a retail-driven rally anymore. We're seeing major financial institutions like BlackRock holding huge amounts of Bitcoin, and reports from banks like Standard Chartered are also calling for a $150,000 Bitcoin this year. The whole idea of a supercycle versus the traditional four-year pattern is the main debate right now. The theory that institutional money will buy the dips and prevent a massive 80% bear market like we've seen in the past is very compelling. The real test, just as he mentioned, will be the market's reaction after this next leg up. If Bitcoin does pull back to around $110,000 and find strong support, it would give a lot of credibility to the supercycle narrative.